A Wall Street Journal leak reveals Nvidia might finance OpenAI with a $250 billion infrastructure backstop and $350 billion for chips. Combined, that represents a potential $600 billion financial exposure for a single corporate partnership. The catch is that the borrower asking for this massive line of credit, OpenAI, does not actually have an investment-grade credit rating. To make a deal of this size work without traditional bank approval, the companies are exploring a controversial mechanism known as circular financing. By acting as their own lenders, these tech giants are completely bypassing the traditional financial system to keep the artificial intelligence industry moving. The massive bottleneck forcing this entire deal is a physical location, a decommissioned uranium enrichment plant in southern Ohio. This site is being developed into a massive 10-gigawatt data center. While a Japanese firm is financing the construction, the power allocation is effectively controlled by the U.S. Department of Commerce. Because AI requires enormous amounts of electricity, competitors like Google, Microsoft, and Anthropic have all spent recent weeks directly lobbying the U.S. Commerce Secretary for access to this exact same grid. OpenAI wants to win this site to secure its own independent data center, freeing the company from having to rent server space from Microsoft and Amazon. The sheer electrical demand of training language models is forcing software developers into geopolitical bidding wars over state-level power infrastructure. OpenAI wants to control that independent infrastructure, but they do not have the liquid cash required to buy the real estate and fill it with hardware. Nvidia has tried to solve OpenAI's cash problem before. They initially planned a $100 billion investment last September, but internal corporate friction caused that deal to stall, and it was eventually restructured down to a $30 billion equity stake. Nvidia first uses its massive balance sheet to guarantee OpenAI's Ohio construction debt and lease. This guaranteed space gives OpenAI capacity to purchase hundreds of billions in new GPUs. OpenAI then executes the purchase, sending that capital directly back to Nvidia's bottom line. Nvidia is absorbing immense real estate debt simply to ensure its biggest customer has the buying power to afford Nvidia's own products. By structuring the deal this way, it becomes nearly impossible for outside investors to tell where organic market demand for chips ends and artificially subsidized demand begins. We are already seeing the consequences of this massive infrastructure debt for OpenAI by looking at one of their current major partners, Oracle. Oracle's stock has plummeted from its recent peaks as investors begin to heavily scrutinize the enormous debt the company absorbed to build out server capacity for OpenAI's contracts. This chart tracks Oracle's credit default swaps, which act as a form of insurance in the bond market against a company failing to pay its debts. As you can see, the cost of this insurance for Oracle has recently experienced a severe vertical spike. Looking back along the timeline, those swaps have just hit their highest levels since 2008, meaning the bond market is currently pricing in a legitimate risk of financial default at Oracle. Industry commentators note that this financial stress is spreading, with traditional banks now actively steering clear of these circular AI financing structures altogether. Legendary investor Michael Burry has openly mocked the around and around nature of this deal, while heavily shorting Nvidia and semiconductor ETFs to bet against the sector. Whether this $250 billion leak becomes official or not, the AI boom has grown so cash-hungry that tech giants now have no choice but to act as their own banks, absorbing huge amounts of risk to keep the music playing.